Welcome back. You're still tuned into Trading Hour. TVS Supply Chain Solutions reported its Q2 numbers. Company saw its revenue go higher by 6%, but margins came in under pressure. Profit after tax surged nearly 54% versus last year. That was led by higher other income and lower finance costs as well. Mr. Ravi, who's the managing director at the company, is joining us now to understand the outlook going forward. Mr. Ravi, good morning. Thank you so much for joining in. Well, it was a 6% revenue growth and other income was up 60%, which led to higher profits as well. Can you give us a sense of what was the impact of reduction in GST rates on the business? How has it been in Q3 so far? And what is the outlook for FY26 considering that big change that we have seen in GST rates?
I think it's thank you so much. It's been a good quarter, stellar quarter actually. It's been a landmark quarter for us as we delivered a PBT of 23.3 crores. I think it is a high since we listed. And it's come on the back of very strong delivery efficiency and cost optimization. When you look at the India perspective, the India business grew by almost 11%. The freight business also contributed to the India business, thanks, I guess, in a way, to a lot of shipments during pre-tariff deadline. But if you look at it from an overall perspective, the India business looks very healthy. We are actually looking at a significant opportunity given the GST rate reduction. We are seeing uptake in the volumes. And we expect 3 to 4% sequential growth on the India business. So very bullish about the opportunities in India from a company perspective.
Ravi, hi. Morning. Rima here. What about the overall top-line growth? You've been struggling with mid-single-digit kind of top-line growth. Q2 was 6%. Q1 was about 4-odd%. FY25 was also a high single-digits kind of top-line growth. Because in the past, you've spoken about your aspiration of mid-teens kind of revenue growth. For FY26, FY27, what do you expect on the revenue front? And then we'll get to the PBT guidance.
Right. I think you're absolutely right. The aspiration of the company is to be in the mid-teens. And we saw about a 6% growth year on year this quarter. Going forward, I think the opportunity, when you look at the pipeline, we have almost 6,200 crores of pipeline. And many of these opportunities, especially in the ISCS side of the business, are slightly longer in terms of gestation period. We are confident of closing quite a few deals in this coming quarter and looking to, like I said, a 3 to 4% sequential growth over the next 2 quarters. That should take us to a double-digit growth for the full year. That's the outlook from an FY26 perspective, and continuing on that trend to get to an aspirational mid-teens number for FY27.
Mr. Ravi, your business development pipeline, if I read correctly, is well over 6,000 crore rupees. What is the execution timeline for that, and what are the kind of margins that you are envisaging for these projects? Are these high-margin projects, low-margin projects, and what does that do to your overall margin trajectory for the year?
I think the margin has to be looked from the fact that the ISCS business has actually seen a 16% margin expansion from Q2 of last year. The ISCS business, if you remember last quarter, we had guided to the fact that we have combined the UK entity to one, and we see a lot of operational efficiencies out there. And that is really playing out. We expect that to get completed by Q4 of this year. So we should exit Q4 at a significant expansion in the margin in the ISCS business, which today contributes almost about 70% of the overall revenue of the company. So from a company perspective, we will continue to see expansion in the EBITDA numbers and the subsequent increase in the PBT and PAT numbers for both the year and going forward. We expect FY27, we expect to complete at about 4% PBT.
So when you say you will continue to see EBITDA margin expansion, if you can quantify that for us, Ravi, how much will that be in overall business and your key segments as well? Because this time around, even the global EBITDA margins have halved. So what does it do to the consolidated EBITDA margins?
Right, the global freight business, global forwarding business is definitely an area which is on watch. We had messaged it last quarter also that it is impacted significantly by the overall global macro. we will continue to see softness in the global forwarding business, and we will see sequential uptick, but it's not going to be something which will not be a trajectory change from a global forwarding business. But on the ISCS business, we will see significant expansion. So from right now, the ISCS margins have expanded from 8.1 last year to 8.7. We should be in the region of 9 and above when we finish the year for FY26. So we see significant opportunities to expand the pipeline, and that's coming on the back of the initiative that we have kicked off. We call it Project One, which is the unification of the European business, and that's giving us significant headroom to expand the ISCS margins to over 9%. So overall, we expect ISCS to be in the region about 9% and GFS to be the 2.5% margin, which will get the company's margin over 7% at the EBITDA level.
Thank you very much, Ravi, for joining in. That's TVS Supply Chain. It's been a bit of an underperformer since its IPO 2 years back, August of 2023. I think the issue price was 193. Stock today is 122. Get into